The laws in South Africa surrounding the taxation of foreign investment income have changed considerably in the last few years. In the past, an amount of 3,700 Rand of foreign dividend and interest earnings was exempt, but this has all changed over the past couple of years. Interest earned from offshore investments is now fully taxable without any exemption amount being allowed, but the taxation of foreign dividends earned by SA taxpayers is a bit more complex. SARS will add only an amount of 15/40 of the foreign dividend earnings to your income for tax, and SARS will of course only consider an equal portion of the taxes deducted offshore when you come to claim taxes already paid on your assessment. You will have to forfeit the rest of the tax deducted offshore. You must remember all this when doing provisional estimates of taxable income and related estimates of taxes already paid or deducted. It can actually get a lot more complicated when estimating the amounts of tax deducted offshore that you may be allowed to claim on provisional estimates. You have to include only 15/40 portion of the total foreign dividends in your provisional estimate of taxable income. SARS will not allow you to claim any taxes deducted offshore that exceed the amount of tax that would have been payable here if the investment had been a local investment. This means that you should take as much care as possible with a provisional estimate to see exactly how much of the taxes deducted offshore you will be allowed to claim, and this may mean doing a comprehensive assessment estimate for the full year. Where a taxpayer has claims for taxes deducted offshore from foreign investment income, or even where a taxpayer has tax credits for medical contributions and or medical expenses, then a provisional estimate now requires a lot more work than in the past. Let's see how the WinTax 2015 software program handles different foreign investment figures. Looking at this taxpayer's IRP5, we can see that he earned 300,000 Rand salary in 2015 and paid 51,421 Rand in pay-as-you-earn. If we now look at the foreign income screen, the 3,700 Rand tax-free portion of foreign dividends and foreign interest earned offshore was abolished a few years ago. So if this taxpayer earned any foreign interest, then it would be fully taxable. A special procedure applies to foreign dividends. If we need any tax tip information on foreign income, we can click on this little info button here, and it'll open a little tax tip window where it'll explain to us how foreign interest, foreign dividends, how that works. We can see that this taxpayer also earned R1 million in foreign dividends, and 100,000 Rand in foreign tax was deducted offshore as a withholding tax. That means that the offshore dividends were taxed at a modest 10%. Although we enter the full amount of R1 million here as code 4216 foreign dividend income into WinTax 2015, SARS and WinTax 2015 will automatically only take a portion of this R1 million as being taxable. The portion will be 15/40 of the 1 million, which is 375,000. International agreements amongst tax regimes around the world see dividends taxed at around 15% and top rates of personal tax at about 40%. Now, if I drag the auto summary screen over this screen, we can see the total income is 675,000, made up of the 300,000 Rand local salary plus the 375 taxable portion of the foreign dividends earned. We can also see that the tax due after the primary rebate is 183,246 Rand, and we've only paid 88,921, leaving us with a due by you of 94,325. You see, SARS says that it is only fair that as SARS allows you 15/40 of the foreign 1 million Rand dividends earned as income for tax, that SARS will only allow you to claim 15/40 of the 100,000 Rand tax deducted offshore. This means that you must forfeit 25/40 of the 100,000 Rand tax deducted offshore, which means you forfeit 62,500 Rand. The balance of 37,500 Rand plus the 51,421 of pay as you earn is your taxes amount paid of 88,921. In this case, you are left with a due by you shortfall of 94,325 Rand. In fact, if we look at the final page in the Wintax 2015 report, we see the actual forfeited amount of 62,500 shown, and the balance of 37,500 is allowed by SARS. Now that was pretty straightforward and fairly simple. What about a case where even more tax was deducted offshore? What if the dividends were taxed at 30% at source overseas? There I've changed the code 4112, tax deducted offshore, from 100,000 to 300,000. And I've superimposed the auto summary, so we can immediately see that our due by you has decreased, but it is still a substantial 22,951. You see, SARS will never refund us for too much tax having been deducted offshore by a foreign country. In fact, SARS introduced 6 kwart to limit the amount of tax we can claim in a case like this. Let's have a look at section 6 kwart using our example and see what 6 kwart restricts our claim to. This is the 6 kwart formula, which limits claims for foreign taxes deducted offshore. The formula is taxable foreign income divided by taxable foreign income plus taxable local income multiplied by the tax due on the total of taxable foreign plus taxable local income. According to the 2015 tax tables, the tax due on taxable foreign income plus taxable local income would be 195,972. Here is our formula here. Taxable foreign income is 375,000 and the taxable foreign plus taxable local income is 675,000. So 375,000 divided by 675,000 multiplied by 195,972 equals 108,873. This is our 6 kwart limit on our claim for foreign taxes deducted offshore. Now, if I just scroll down here a bit, we can see the tax due after primary rebate is 183,246. And we can also see that we have paid 51,421 Rand in pay as you earn. Added to that, our 6 kwart limit foreign tax means that the allowable taxes we can claim is 160,294. As the tax due is 183,246, and we can claim taxes paid of 160,294, it means we still owe SARS 22,951. If we looked at the 2015 program again and bring over the auto summary, you can see our total income of 675,000, and there's our tax due of 183,246 after the primary rebate. There's our 6 kwart limit plus pay as you earn paid, and there is our due by you amount of 22,951. Looking at the final page of the Wintax report, We can see there's no forfeited amount shown here, and down here it tells us that 6 quat applies. Section 6 quat is also a bit more complicated than it initially looks. When calculating the deductions to be used to determine taxable foreign and taxable local incomes, you have to apportion deduction claims for things like RA claims, etc., according to the foreign and the local incomes. This is only fair, as if you earned half your income from foreign sources, for example, then it makes sense to say that half your RA contributions were funded from your foreign income and half your allowable RA contributions can be used to reduce your foreign taxable income.